Hey guys, it's that Dividend guy coming back at you with a Robinhood portfolio update. Hopefully everybody's having a GGD, a great green day in the market. You know I always wish the best for my viewers and subscribers. So let's jump right into the portfolio, guys. Right now, as of today, the market's still open, but we are down around $170. The 1 week mark, we're down only 12 bucks. The 1 month mark, we're down a grand, almost 2%. The 3 month mark, we are down 2 grand, down almost 4%. Year to date, we're only down around $800 or 1.5%. For the year, we are up $410, up about 1%, and then all time we are up $14,390.80. So we are up pretty significantly, but short term, the market is a voting machine. Long term, it's a weighing machine. So the other thing I like to look at is the really big opportunities I had, like in 2020. Again, another decent one here in October. Then another drop here, September of 2021, and then, of course, the drop in 2022. It's easy to look back in hindsight and say, oh, I should have bought a lot more here. Of course, this was the bottom, but nobody really knows that. Nobody knew the peak for my portfolio was on April 4th. I could have sold out at a 54% return according to the all-time review. But I'm not in this for short-term fluctuation. I'm in it for constant dividend increases, that buildable compounding monthly income. So jumping into the portfolio with Realty Income, sitting at $64.32, 142 shares, $9,100 of market value. Average cost is $67.15. 18.3% of the portfolio is in Realty Income. Today we're up $60. Total we're down $400, down 4.2%. Dividend coming in on the 15th of $36.14. Then we've got Coca-Cola at $59.86, 10 shares, about $600 of market value. Average cost is right around $61 per share. Only 1.2% of the portfolio is in Coca-Cola. Today we're down $1.55. Total we're down near $10, down 1.6%. The goal for the portfolio for this year specifically is to get Coca-Cola, my favorite company, to 100 shares, and I will be doing that. Next we have Altria at $46.70. 315 shares. Market value is $14,700. Average cost is right around $47.40. Around 30% of the portfolio is in Altria. Today we're at $48. Total we're down $200, down 1.3%. So a little bit of a cost down average opportunity there for Altria. Then we have Apple at $152.26. We have 1 share. Average cost is $132.66. 0.3% of the portfolio is in Apple. Today we're up 70 cents. Total, we're up almost $20, up 14 or almost 15% on Apple with our single share. This is one of those that I do want to build up, and I will build up over time. It's just I don't want to buy it at a $19 clip or 15% uptick in the price. So I will have to wait a little bit on that. There has been a few buying opportunities, since the year started. So I'm not super worried about it. Looks like there's been 1 or 2 really big dips on it, like right at the beginning of the year. So this is one of those that I'll just have to wait for another opportunity, and when I see it, I'll be stacking cash, and hopefully I can pour into Apple just like I did in AbbVie, because that's really helped my returns. Next we've got AbbVie, which is down big today, but not big enough. 95 shares, 14 grand worth of market value. Average cost is right around $95 a share. About 28% of the portfolio, or almost 30%, so a third of my net worth is in this stock. Today we are down $340. Total we're up $5,100, up about 57%. Love AbbVie. It's my best overall performer, and I love that growing dividend income. Next we got T. Rowe Price. 100 shares, $11,000 worth of market value. Average cost is right around $122 a share. 22% of the portfolio is in T. Rowe Price. Today we're up $80. Total we're down nearly a grand, down about 8% on T. Rowe. So guys, the interesting thing about T. Rowe Price, especially right now, is the fact that when I bought it, so let's say 126, right? The highest that it's been at this year is 150, right? So let's say my cost is $120. So I have a $40 upside on this per share. So at 100 shares, it's $4,000 of upside plus the dividend. So even at the price I'm at, it was a good deal when I bought it. It's an even better better deal now. So I do want to allocate more capital towards T. Rowe Price because it is below the average cost, and if I could get this with AbbVie, I would be loving it. So, sound like McDonald's. But definitely will be adding to T. Rowe Price. Wish I could add at these levels, but I do have a job interview tomorrow. So hopefully I start next Monday, and I can get some more, get that reoccurring, that regular cash into the portfolio again. But guys, then we have the watch list, which of course has Visa on it, which my cost that I want to get in on it would be like $190 to $200. So I have like a $30 decline that I'm waiting for. So just like I said with Apple and AbbVie, same thing goes here. I want Visa at a lower price. But I do love the company. I will be adding to it. And once, just like I said with Apple, this is one of those that I want to do another AbbVie with, that I want to buy at a really good price, pour money in when it makes the most sense. But in order to do that, I need to save up money and not always jump at opportunities. So I need to be a little bit more disciplined when it comes to my capital allocation, and just hold maybe $1,000 or $2 in the portfolio so I can really jump on some of these opportunities when they do arise. So for Visa, they for the past year, the only opportunity that they really dropped close to 200 would be December of last year, and then of course September they went down to about 180. So there was a couple opportunities there, but that was before I really was looking at Visa. So over time, I'm gonna have dips where it makes sense to buy. Obviously, that crash in March of 2020 is huge, and then of course December 2018. So there have been some glaring buys for Visa, and of course any stock is going to have that. Fluctuation is the name of the game. You just have to have enough capital set aside to really take advantage of those fluctuations. And then of course, guys, we have Berkshire, which I would want to get it at like 260-ish, or like 280-ish. Sorry, I saw that 360. So I would want to get it around like 280 to 300 would be so it's near my cost with about $60 of upside, $60 of upside. Right now, about $50 to $55 of upside. Currently, I do realize it doesn't pay a dividend, but I'm okay with that. But like even within the past year, guys, we've had a couple of really good opportunities to buy. June in 2022, of course, October, it got down to 267. So there's been opportunities to buy Berkshire Hathaway. So right here, I wouldn't mind adding a position just to have it, and then cost down average big time. So I could do that with Visa as well, just buy a couple shares to have it, to initiate the position, and then really pour money in once it gets down to like that one. If I could get it down to like even 180, would be phenomenal. So for now, guys, that's the plan. I'm going to stack cash, focus on my Coca-Cola position, buy more when it makes sense, but also try to hoard a bit of cash so I can take advantage of opportunities in the market. So with that being said, guys, thank you so much for watching. Remember to hit the like button on my channel, that dividend guy on this video specifically, so more people see it, so we get more people watching, because that helps so much. And it keeps me motivated to keep me doing videos, as well as hit that subscribe button, guys. Since I've been posting daily again, I've been getting more subscribers. If you guys like dividend investing, if you know somebody that might be interested in it, share the videos. Let people know it's a growth channel, and feel free to tell me, check out my channel down in the comments below. I'm always looking for new channels, and I want everybody to win when it comes to passive income and retiring early. So make sure you guys let me know down in the comments below. If you guys are starting a dividend journey, or you guys have stocks or shares or whatever, just let me know down in the comments. Thank you guys so much for watching, and I'll see you guys tomorrow with another upload. Take care.